Hello everyone, Wobbly Giraffe here with another video. I'm going to go ahead and compare two of the silver miners, right? So I'm very interested in Silvercrest miners, or Silvercrest metals, excuse me. Um, and I'm comparing them to a lot of the other major silver slash gold producers, okay? So another big player in this field is First Majestic, okay? And on their website, all of these companies typically show all of their mines and a lot of the information about the mines. Okay. So on First Majestic, we can see that they have their operating highlights for, I think I'm on Santa Elena. So let's go on their main one, San Dimas, right? So if we go down to operating highlights, let me turn on the music a little bit. Thank you. If we go down to their production results, right, and we'll just say we look at 2020, we can see they have their ores processed, the tons milled and leached. Okay, so that's also going to be another focus of my research coming up, where it comes down to how fast can these companies mine silver to take advantage of the bull run, but they also have to, excuse me, to say it a little bit, some little burpee. They also have to mill this ore. So what milling is when they essentially run the raw rocks that contain some silver, gold, or any precious metal through this industrial process, kind of crush up the rocks and put some chemicals in there to remove the silver and gold to then send to a smelter. Okay. So a company could essentially be the quickest miner, okay, have the most silver. But if they can't mill it or have someone else mill it, then they can't take advantage of the silver bull run. Okay. So it's another important stage of this process of mining silver, and also something I need to look at in my research. So for First Majestic, we have their stats for just one of their mines. It's probably their main one because it's the first one listed, San Dimas. So they talk about the ore process, the tons milled and leached, and leach is a part of that process of taking it from the mill to the smelter. Okay. And it's 713,000 and change. Okay. The average silver grade is a little under 300. Okay. The silver recovery is 94%. Okay. So that's pretty good. Total silver ounces produced 6.4 million silver ounces. Okay, it's quite a bit. Gold ounces produced, which I'm not as concerned with, but that is still money for the company at the end of the day, is 71,500. The average gold grade is 3.24. Okay, the gold recovery is 96%. And the total production, i.e., converting the gold to its silver equivalent. So the total silver equivalent, which is the silver in this case, the gold, and I think First Majestic also does lead and some other precious metals. Maybe that's not in this number, but they do have some other mines as well. Or was that might have been excuse me, that might not be First Majestic. That might be MAG. What is their name? Mag Silver. I think they do some of that other stuff as well. Okay. So they have their underground development of 26,000 and their diamond drilling, which that's more just exploring for stuff. I'm not necessarily fully concerned with that because I'm not sure I've seen a lot of companies publish that. Keep that in mind going forward, but there you go. So let's kind of compare this to Silvercrest. So Silvercrest, their current main property, although they're starting to ramp up El Pichacho, is Las Chivas. Okay, and they're still expanding in that, but that is pretty established at this point. So if we look at this, they have their gold grade per ton for, I wish I could highlight a little better, but whatever. I hope you don't mind. Their average gold grade is 4.81. Okay. So let's just straight up compare with this. Their average gold grade is better than First Majestic. Okay. Their silver grade is 461. Okay. So 461 grams per ton for silver. Okay. If we look at First Majestic, their average silver grade is a little under 300. So that also is better. Okay. So both of their grades are better. So when they go mining for a certain amount of rock, their average is that that rock has more gold and more silver. Okay. And we do want to keep in mind the processing factor of that, the milling factor. So they have to take it, they have to get the precious metals out. Then they also, industry standard convert it to a silver equivalent of 879. We would expect that to be higher because it's gold and silver being converted to silver. So where is it here? I'm drawing a blank. Where are you? Total production silver ounces equivalent. Do they have a number for that? I do not see that. Shoot, I thought I had that here. Either way, we would consider their silver equivalent to be higher because the gold is being converted to silver. And if the gold and silver grade is higher for Silvercrest, the silver equivalent will be higher as well. Okay. So that's a pretty important fact, okay, that we can compare across mines. Okay. Now, a missing factor of that is the total production. But even if it had more production or more silver like in the mine, if it takes 10, 20 years to get that silver out, the bull run, which silver bull runs are typically very volatile and happen very quickly and they go super high, but they don't last a very long time, then yeah, this other company might have 20, 30, they could have all the silver in the world in this mine, but if they can't get it out, then they're not taking advantage of that bull run. Okay. I turn down my music a little bit. Yeah. It's yelly in my ear. Anyhow, so what else do we have? I do like that Silvercrest lists a lot of its operating costs, its revenue, and the capex as well. Okay, so that's good. Working capital, and the net free cash flow. That's good as well. Okay. So let's come back and see, is there anything else to really compare here? There's the gold recovery and the silver recovery. Now they do have that here as well. So let's do that, right? So the silver and gold recovery is if I mine 5 meters of rock, right, and I'm essentially trying to mill it, it's how much of that silver that's in the rocks am I getting out, right? So we could have a rock that's just pure silver, hypothetically, of course. And if our silver recovery is 50%, we're wasting 50% of that rock. Okay. All right. So let's look at gold recovery for Silvercrest. It's 97.6. The gold recovery for First Majestic is 96. Okay. So a little better for Silvercrest again. And the silver recovery is 94.3. And for First Majestic is 94. So once again, Silvercrest by a hair beats First Majestic, at least for their top of mines. Okay. So for all intents and purposes, I think that paints a better picture for Silvercrest to take advantage of the bull run if we can investigate a couple of other topics. Okay. So one, it comes down to the milling and the smelting, right? I.e. getting it to the market the quickest. We do want to know their cost to mine or explore for that silver, right? What else? We do want to know the total amount of ounces in their mine. So there is that, but that does kind of come down to how fast can they get it, right? A long-term play, better long-term play might have more silver, but that might not be like the short-term or mid-term play. Okay. So let's see, total silver, obviously total gold, the mills, and i.e. the leaching or the smelting, whatever they do with that. And then obviously we want to know the cost of running that. So how much it costs to explore or just mine in general for that silver or gold. Okay. So I don't see the all-in sustaining costs for First Majestic. I know I've seen it somewhere else. They might not do it on like a mine basis. They might, I'd have to search a little more for that. Let's see. I think they had it here. Yes. So we have our 2021 E all-in sustaining costs for this mine for First Majestic. It's $11 and 36 cents to $12.23. Okay, so if we come up to first Silvercrest, excuse me, we have our all-in sustaining costs, so the dollar per ounce of silver equivalent of $7.07. So like that's, to me, that's quite a big deal. That's significantly less, right? So that is the dollar amount we're paying to mine a given amount of silver, in this case, an ounce, right? And that has a couple of important implications, right? So if a company had that higher all-in sustaining cost, then they are not, one, they're not as profitable, which makes it harder to expand the mine, that mine specifically, or the company overall, right? So if the bull run takes off, okay, and they're not necessarily as well funded now as some of these other companies, well, the other companies could buy more drills, they could build up that mill, right? They can invest elsewhere to then further grow, okay? Since First Majestics is quite a bit higher, we're looking at what? We'll take the lower bound just to be conservative, right? $11.36. We will just come here along, bring up that handy dandy calculator. I think it was $11 and what? $36. What was 707 was Silvercrest, right? You're looking at 60% more. That's pretty significant per ounce, right? And so what that means is as Silvercrest starts really taking advantage of the increase in silver prices, which it's gone up already. Let's look up that silver spot price, shall we? So the silver price today is at $28.04 per silver ounce. Well, like if we just kind of take in this all sustaining cost at face value, right? Hold on. Let's back up for a second. I'll go to that in a second. We can see that Silvercrest Metals is then better able to take advantage of that, right? So let's clear this out. Let's say we have 28. Right? And the formula probably gets a little more complex than this, but this is a good estimate, right? So we have our 20, what was it? 28 and 6 cents, 4 cents. $28.04. We could do minus 707. Right? So that's how much Silvercrest is more or less making per silver ounce, plus some other costs and what have you, right? But that's a nice figure right there, okay? They're getting more of that silver price in profit, okay? Then for First Majestic, if we come back and we're going to use the conservative one, so it's 28.04, right? Minus that 11.36, right? That's less, obviously, okay? So you're looking at Silvercrest making more money overall as long as they have silver to mine for the duration of the bull run, okay? Even if they say have less bigger mines. I know a couple of people asked me on online forums, like, why didn't you go for this company? Why didn't you go for this company? Why didn't you go for this company? And a lot of them had either more mines or bigger mines. So they have more silver or gold, sure. But it comes down to who can get it the fastest, who can get it the cheapest, and some other factors, right? Who can get it to the market fastest, who can get it the cheapest, who can reinvest, okay? One sort of thing we could look at, right, is if Silvercrest is making that much more money per silver ounce than First Majestic, Silvercrest could easily go exploring for other mines, right? A lot quicker and a lot easier. So Silvercrest also is one of the fastest and cheapest sorry, someone just walked by my window. Silvercrest is one of the fastest and cheapest exploration silver companies. they said that it cost them 20 cents to explore per ounce of silver. That's very low. Okay. So because they make more margin on per silver ounce because they have lower costs, right? They then can buy more land, explore for more silver, and build up quicker. And then on top of that, they are one of the fastest companies to get a mine built. One of the graphs I know Chris Ritchie showed in a presentation was that Silvercrest takes 7 years to set up a silver mine. Okay. From buying the land and kind of doing those preliminary surveys to first drill hole, 7 years, where some of the other companies in the industry were like 20 plus years. Okay. So there is a major time component in the Silver Bowl one. And Silvercrest overall is looking primo supremo in that regard. All right. So, and First Majestic's just one company. I do know that they're one of the biggest players in the field. Okay. We also could compare Pan American Silver. I mean, heck, let's do that right now. Okay. So here's their largest silver producer for Pan American Silver. Let's see if we can kind of compare those numbers, shall we? Cash cost per ounce. I do want to know the all-in sustaining cost. I'm not sure that that's quite the same thing. We'll see. All right. I will say this. I like to see that companies have 100% ownership. I know Fresh Nilo and Mag Silver had like a 50-50 deal on a mine. And I feel like that could cause issues. I don't think Mag was mining any of it though, like Fresh Neo was, but kind of odd in that regard. Um, so here's their mining and processing. Okay, so they have their average plant throughput of 1,800 what is that, tons per day? Tons per day. Okay, good to know. Hey, learned that today. Where if we even come to First Majestic, I'm gonna keep our silver spot price over here. If we come over to First Majestic, right, they talk about the processing over here. They have a mine or a mill, excuse me, here with 2,500 tons per day. Okay, that's better than Pan American Silvers. Okay, so that's that second component. How fast can we mine it? How cheaply can we mine it? How much can we mill? How cheaply get it to market? So First Majestic, at least for their main mine, right, versus Pan American Silver for their main mine, in that phase of getting it to the mill, look better. Okay. So yeah, and once again, in the long run, I'm concerned with the total amount of silver in the mine, but in that short to medium term, it's who can take advantage of the bull run. Okay. Sorry, just looking at what song we're on. It's interesting music. It's different. So let's just keep kind of searching down here. Well, let's see. Cash cost per ounce is a non gap measure. Yeah, see, I want your all-in sustaining cost. I'm not, that could be the same thing. I'm not necessarily going to take that at face value. Let's see. Let's do some digging ourselves, right? Yes, I'm not sure. Is that the same thing? Such as cash cost per payable ounce of silver. net of byproduct credits, all-in sustaining cost per silver ounce sold, free cash flow. Yeah, see, I want your all-in sustaining cost. Let's see if we can find. Let's see. Let's do the technical report. Just closing some extra tabs I don't need here. All right. Let's see. Oh boy. This might take a while. Let's. Can I search? I can search an PDF. Can I? So let's search for AIC. Nope. So it's all in. Is it with a dash in? Let's just do sustaining costs, shall we? 3 matches. Nope. See, I'm not seeing that, and that's a little iffy. What was this? Is this? Yeah. Give me something here. Let's just keep going along, shall we? Do you have any forms investors? Let's just go down this. Yeah, see, that's a little sends up a yellow flag in my mind because I do not believe those are the same numbers. See if they have it. They might have an overview in here. Let's see. Yeah, see, like once again, not really concerned. If their biggest boast is like, I have the most of this material, then like, nope, sorry. Now they are diversified. I can see, I'm pretty sure they assumed a lower cost of gold than Silvercrest. I could be wrong. I have to recheck those reports. Let's just do that right now where we're at. Using spot prices of, yeah. Now is this more recent? Yeah, I mean they typically update those things, so maybe that's just at the time of making this page versus what they assumed going forward. Oh, is this what I was looking at? Oh boy. Do we have an AIC in here? No. Let's change that over there. Sustainability. Just keep going down this stuff. See, so I'm not sure. Let's check the report, but I'm not sure that it would be in there. So this is going to be purely their financials, most likely. Let's just open that. Shoot, we'll learn about. I'm not sure if I've heard of CVF. I probably should know that. So don't care about dividends, careers, don't care about careers, news. I mean, maybe we'll go through news. But see, I gotta say that's a little yellow flag in my head that there's a lot less information than what quite a few people, such as Glenn C, right, who articles I read that are backed up by PhDs, have said are good things to know. I mean, let's look at reserves and resources. I think I already kind of looked at this, but um, well, either way, we can come back to that in a second. Let's kind of go back to our original argument, right? So let's compare their gold grades, silver grades, silver equivalent, the recovery rates. We could go with production as well. That's actually a good one. Because yeah, they could have 30 million ounces of silver, but if they're only producing 100,000, that's not as good than if they're producing more, but maybe they had a smaller silver mine. Okay. We do want that all in sustaining cost as well. Excuse me, I have a bit of a bug bite. So, I mean, heck, let's go with La Colorada. Colorada. I hope I'm saying that right. What's their silver grade per ton? 339. Let's go with Silvercrest. Silvercrest wins that. Okay. There is the contained, which good long-term play, not necessarily concerned with it personally, unless the mine's about to go out. That's certainly something to keep in mind. The gold grade per ton for them is 0.25. Obviously, they have some other better mines, such as this one in Argentina. So, does cancel out there, but at least for this mine, it looks like Silvercrest is better by quite a bit. Now, which has the most gold for these guys? I mean, oh wait, which one am I on? Dolores or La Corada? Where are you? Oh, give me a second here. Wait, was I comparing the wrong? Wait. Oh, getting confused. Give me a second. Screw it. I guess we'll just keep going with what we're doing. I thought I was comparing. Yeah. Okay. I never have three companies at once. Do two. It makes a little more sense. All right. Anyhow, we can see La Colorada was doing worse in a couple ways. Obviously, they have more copper. Not too concerned with copper. That's already getting inflated in a way. I'm getting ready for what's get ready to go up, right? But hey, they're more diversified. I'll give them that. Then what was PB? Was PB iron? Lead. Okay. What's iron? All right. Zinc. ZN. They also have more zinc, obviously. Silvercrest isn't doing that. So they're more diversified in that regard. Oh, so actually they don't have any copper in Colorado. I was looking at the wrong row, but they do have what was it? Zinc? Well, zinc and whatever the heck that was. All right. So, do we have anything talking about their costs? This is something I'll look at a later date. There's the inferred, there's the proven, the probable. There's a couple different categories that we put these commodities into as we're going through different phases of mining that mine. Okay. So there is that. That's not the topic for today per se. Here we go. see, is that all in sustaining costs? I don't know. It doesn't say. Oh, okay. Excuse me. This is what they're assuming to be the price of that commodity. Yeah. So it seems like 16, 18 is pretty normal there. That also compared with Pan American silver. Okay. Um, where are your all-in sustaining costs? Mm, let's try and find it, but I'm not seeing it. Probably could hand calculate it somehow, but that definitely should be like pretty publicly available information on the mine. Um, this is gonna be some reading. Let's blow this. Oh, what did I do? All right, hold on, give me a second. I'm gonna change my music. All right, I'm back. Change the music to something a little less angry. All right, let's come back to this, shall we? Let's just see if we can find something besides whatever number they threw on their page, right? There. So I will say I like this layout. This is something I will be looking at for each of the companies as well. And this goes back to what I talked about, what we measured, what we think is indicated, putting those together, and then kind of updating that over time as we start to mine. We have the proven, the probable, adding those together as well. Okay. We do want to see that those are on target or like understated, right? Some of these companies can sort of overhype things by being like, oh, like we think we have 50 million ounces of silver. And then when it's all said and done, they did not, right? All right. So introduction, qualifications, people. Oh, the sun actually came out for the first time in like 3 days. Wow, I might have to step outside so I don't look like a ghost. All right. What else do we have? Okay. Claim information, not too worried about. I mean, unless they don't have a claim. They're legally digging on that mine. I'd be a little worried. Um, alrighty. Yeah, sample price. Yeah, see, this is all geological stuff. I'm not too worried about this at the moment. Um, okay. So since the mine is in operation, any sustained capital expenditures are justified on an ongoing basis based on actual experience of the mine. Sustaining expenditures to the life of mine are assumed to average $9 million US per year. Okay. Estimated unit costs US per ton. So would you then break that down by the amount of silver they got out of there times the grade for silver, and then that gets it to you? I don't know. It's one way to get some sort of answer at least. What did they think there? See, but all in sustaining costs would be what all of that more or less put together, and then yes, it'd be this total. And let's see, the assumptions are justified on the current actual operating annual output of 814 tons. Is that per year annual? Yeah. So what? Eight. Oh, let's clear this. 814. Oh, 814. I love it when my are they missing a zero here? Or is that a ooh. Did they mean 814,000 or because I know other countries don't have the decimal point. So that's oh no. Well, I don't know how to take that number either. So we'll do it both ways, see which one seems more realistic, I guess. Where did they say how much they were mining per year? Does not say. Let's see if that's on their website. Where is their year? I don't care about your reserves. How much you producing now? Okay. See this, so that's why this sort of thing is frustrating, because to get an accurate number to compare across some miners is tedious at best. All right. So away from, I'm going to keep this page open. Oh, I accidentally refreshed it. All right, so let's keep moving on. I want to save that space in case we find it. Don't care about the history. Where were we? Let's actually read exploration because I am looking to get into that soon. The mine has been working for several decades prior to any specific exploration work during that time. Okay. Another thing, I don't think I mentioned this. Maybe indirectly I have, but in this video, we're also concerned with the life of the mine, the LOM, right? So if a mine is toward the end of its life, obviously that means another mine must be built as soon as that one or prior to that one being finished mined. Okay. And a lot of these mines, like, yeah, they might have tens of millions of ounces of silver, but how much of it was mined, right? So we do want to know when the mine was started, whether it was dropped at any point, whether someone picked it up, and how much was mined out in there, right? Okay, let's. So still not necessarily seeing the all-in sustaining cost. I mean, we have the US dollar per ton. Okay. We would need to calculate how much gold and silver or their other materials are coming out of that, and then the grade per ton on those, and then factor that in. But I'm not seeing those numbers openly published. I'm going to assume that's a zero or the American decimal, and probably based somewhere else. Remaining mine life of 11 years. Okay, cool. We will figure this one out. All right. Well, I mean, I'm not particularly seeing that. So we'll continue on. I think I kind of got sidetracked. So I'm not sure how many questions we answered there. If we take their 6.99 cash cost per ounce, which like I'm pretty sure that's not the same thing as all in sustaining costs. Um, they are a little bit better than Silvercrest. Once again, not sure that that's the same as the all-in sustaining cost, and they're better by 8 cents. Fair enough. As far as some of these other questions are, let's look at the reserves. I think we already said what that Silvercrest had a higher silver grade per ton, and they have one better in Bolivia. They have one uh proven and probable. Yeah. So what was Silvercrest at? Oh, their silver was better. Even with the other ones, they're higher. Okay. I do have one in Argentina. Sure. That's probable though. Half of this, half of that, right? Um, okay. Okay. So I feel like we've covered quite a few different topics so far. I think we'll look at one more company, and I'm going to go out and get some sun so I can actually get some vitamin D. That would be very nice. So I'm not having asthma attacks all the time. That'd be cool. Anyhow, I will say this. So Glenn C and a lot of the other PhD finance professors that talk about the best ways to look at mining companies talk about all-in sustaining costs, the net present value. That goes back to the discounted cash flow, the IRR, which is very similar in that regard. I don't recall if they talked about the payback period, but that goes with those, right? And then I'm concerned with the silver grade, the amount of silver, maybe a little less so in terms of is there enough silver to take care of the bull run? the mill, how fast they can mill and get it to market. I'll include gold, but once again, that's kind of a sideshow for me. Um, what else? And then just generally how much it's costing the company to mine that, which kind of goes in the all-in sustaining cost. But we do want to take that into account, operating costs, capex, that sort of thing. Okay. Overall, though, a lot of these metrics are what, like Lindsay and a lot of other PhD researchers say they wanted to see very openly and transparently for these companies. Okay. And I don't necessarily see that for Pan American Silver. I will dig through their documents, see if I can find it later date, but I do think it's important to like have that on the front page of the mine or at least the website, right? So what was one of the other companies I was interested in? Silver miner overviews. We could do Aya gold and silver. Why not, right? Let's come over here. All right, so let's look at their top silver one, right? Sea Grounder, which is in my Excel workbook. I need to kind of finish filling in some of the numbers. Okay, flagship project. So this is their flagship. Cool. They are in Morocco. Can't say I know a lot about Morocco, but maybe not the most politically stable company. I could be wrong. Um, they are. Let's see. That is another thing we kind of want to keep an eye out on is political stability in that region, wherever it is. Because I know one of the companies had a very good mine, but it was in, I want to say Peru, where the president was like, yeah, I'm either going to shut down mining or tax it at like 70% or something ridiculous. And it's like, yeah, that could be the best mine in the world. And it's like, that ain't going anywhere. Uh, so where's the civil unrest metric? I want a civil unrest metric. I know that's a thing. I can't get like a global picture. Impact on US interests. Okay. That being said, I mean, I do see Mexico's on here, but it's typically the southern parts of the company. A lot of those mines are in the northern part. I'm not really sure what impacts on US metrics has to do with global unrest, but hey. Well, come back to another time, but that's all right. Not the main focus of this video, so I'm not gonna waste too much time on it. Let's see. Where are your numbers, my friend? They might have their reserves and resources. Let's find out, right? So Z Grinder is the second most important silver mine in Morocco. So 700 tons per day of mining. I mean, what was that here? Do you have a tons process? 3,000. So what? That's way better. Okay. So yeah, a little iffy on that. 85 still good, and a lot of times these other people just kind of like have that ownership and still let them mine. But like uh, the Office National des Hydrocarbures et des Mines of the Kingdom of Morocco. So I guess it's a government entity. So I don't necessarily like that, but that's not necessarily like a huge deal, especially since it's 15%. Um, so we can see here they have a lot of tons, it looks like. Okay. At least what's measured, right? 282 grams per ton of silver. Okay, well, let's come back to Silvercrest. Now we're comparing their flagship mines right now. It's not necessarily the whole company, but keep that in mind. 461. Okay, so what do we see? We see that's quite a bit higher. Okay. Uh there is inferred as well. It's looking a little lower. Now they are going to expand it to 2,700 tons per day. So that's good. I do like this timeline sort of thing. That's kind of cool. When did it start? Okay. They have their feasibility study. That's always a good read. So I'm going to look through some of that stuff at another date. Unless I can't find a number rightly on the page. Trying to keep things light for now and just kind of point out what I'm looking for in these companies. So we can see there's been some fluctuation in the silver grade, sure. I'm pretty sure Silvercrest has typically gone up. They've been striking more and more silver, so there's that. Um, it's kind of cool. So that's Morocco on the mining sides. So not seeing that all in sustaining costs as far as I can tell. Let's just do cost. I mean, that's a pretty standard word we should be seeing. Alrighty, so let's go ahead and line best financials analyst. We're just gonna see what we find, right? Um, hmm. See, but their financials are gonna be the company overall. Yeah, see, this is overall. Let's just do F for AISC for now. Did that get a hit? That did not. I don't, does it match case in a find? I don't think it does. Let's try that anyways. No, and then sustaining is another word we could search for. No. So fair enough. I mean, that's their overall documents. And see, they might say something like in a presentation. That's so some very long videos. Preliminary assessment. Let's look at this. This might be a good one. Oh, that sun looks so good. Definitely need a haircut. Look at that. Come on, PDF. Jeez. While we're waiting on that, let's look at a strategy. Blah blah blah. Don't care. Nothing useful there. Excuse me. Constitutional monarchy with a long history of political stability. Fair enough, I guess. Um, I think I've already seen this page. Clicked on that preliminary assessment. Let's see our financials. I think we already said that was the company overall, not that specific mine. How maybe I'll just email them. I'm not gonna put that in a video, but I'll probably email them. Pre-feasibility study. Let's see what this is. I'm not sure that that would necessarily include their cost technical report. All right, let's see what's going on here. This might have what we're looking for. Oh, let's see. See, I see they mentioned diamond drilling. I'm guessing that comes down to just exploration more than anything. Um, hmm. Let's just do what we've been doing. Costs, right? Oh. Yeah, so that could be a good thing to read. So what, 229? How do I jump to a page on this sucker? Why would you rotate a PDF? Well, maybe it's a photo, I guess. Whatever. Side note. So can I click on a page now? All right, whatever. 229. I'm so tired. Oh, give me a second. All right, where was I? So they're spending quite a bit on expanding. They are expanding the mill. Fair enough. Life of minus 10 years. Okay, that's good. We have that number. Once again, prefer if that was on the page of the mine, but Silvercrest have the. I don't think they had life mine, but that's okay. Um, yeah. So it's just sustaining. I know there's the sustaining capital, caps up and some. So for some of these companies, I'll probably just have to dig deeper and calculate this myself. It's a bit of a shame because I feel like that is a very important number. Building operating costs. What was before that? I mean, capex, all that stuff's pretty important. Yeah, I'll probably have to hand calculate that. That's fair enough. Oh wait, what is this? Oh no, that's the yearly price. After completion, what is this? Base case parameters and assumptions. Silver price. We could talk. We could more or less take the total revenue of silver sales and subtract all the costs, divide by how much silver they sold. It's one way to do it. All right. So either way, I mean, I think this video has shown a little bit more why I like Silvercrest, that their main mine is better in silver and in a lot of other ways than some other mines. Their mill is pretty good, better than some other mines of the big players. They have that low cost of exploration, which I'll discuss more in a later video. Um, what else? And I think this video has shown how frustrating it can be to research this stuff based on what a lot of other people have said. That there's definitely a way to paint a very rosy picture of any of these companies that like may not hold up to how they're actually doing. Um, so let's just let's turn that down a little bit. Yeah, I think we already looked through that one. So maybe it's there. I'll probably have to go a little slower in my own personal research. I do like to make these videos for educational purposes. In this video, we covered silver, the process of milling, somewhat, the size of the mill in terms of tons per day. What else did we cover? Silver grade, gold grade again, silver equivalent. that all-in sustaining cost, the IVV, the MPV, just a lot of numbers that can help us come to a better conclusion in this specific industry of mining, but can be applied to other companies as well. Okay. I think we talked a little bit about political unrest, which couldn't necessarily find a good graph on that. I know a lot of those are behind paywalls, which is interesting to say the least. What else? Well, we kind of covered three different companies, Silvercrest, one I'm fully invested in, Pan American Silver, and MAG. Did we do AG at all? I don't think we did. Let's do, or was that, so Pan American Silver's PAS. Did we do? Let's close that. I don't recall. Did we do MAG? I don't even remember at this point, to be honest with you. Well, so let's just talk about this a little bit. We'll make a slightly longer video. So you can see they had that 44% interest in the mine with Fresnillo owning the other 56. And I don't feel good about that at all. So processing facilities being constructed at the Juanicipio project. So they're at least processing more ore. Fair enough. That's good. A nominal rate of 16,000 tons per month. Now that I do believe was better than Silvercrest. Sure. I'm assuming that's for their mill, 3,351. I know Silvercrest is ramping that up. What was weird? Yeah. Fresnillo is the project operator and holds the remaining 56. Okay. So it has silver, gold, lead, zinc, and some other things. Okay, blah, 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 blah. I don't know if this was the company I was looking at that was like, oh, that's kind of odd. Let's see, where was it? Construction of the processing plant is under the guidance of someone else. Okay, that's not what I was worried about. The company's share of project costs is funded primarily by quarterly cash calls through its 44% interest in that company that like owns that part of the mine for them. Okay. So there is some sort of corporate bureaucracy there. How much money that has coming in or out, I don't know. But like definitely a weird setup where Fresnillo owns the majority of the mine as the project operator. MAG owns 44%. So like, yeah, it makes a lot of money. But then they also MAG holds its share of the company in like a subsidiary, which maybe they have to do that. I don't know. That's certainly odd. Sorry, I gotta wear these headphones for too long. I start getting ear infections. What can I say? Gotta get a haircut. It's getting way too long. The company share project cost is fun. Okay, I already read that. Oh, what else do we have? See, processing plant had a plant 400 TPD, which is still above Silvercrest. They're trying to go from 1400 to 13,000. Okay. Well, anyhow, no resources. Yeah, blah, blah, blah. Okay. So what do you have here? Let me see. Let's look for that. Excuse me. Just kind of shifting my glutes here. Gotta keep that blood pumping, everyone. So 16,000 tons per month. For what is that mining? Batch processing of. Okay, fair enough. No, so that's for the plant, I would assume. Oh, all right. Anyhow, where was I? Oh, I'm so tired. Um, let's see. Pre-commercial production sales of okay. Production per sales of $1,000, $10,000. It's not very high. So yeah, one of Mag's other projects is the Deer Trail project in Utah. And it's expected to have phase one drilling in 2020. Right. So last year's that's probably started. I have to check the reports in case there are any delays due to COVID and whatnot. It is expected to be completed in quarter two of 2021. So we'll have to look into that, see how that goes. Once again, that kind of comes down to how fast can they start like mining. Okay. So they are in phase two, right? Oh no, so phase one's expected to be finished quarter two this year. And I mean, COVID might have delayed that. So we'll see how that where that led. Yeah. Um okay. The average silverhead grade for the development material processed in quarter one of 2021 was 458 grams per ton. I think Silvercrest was a little below that. Oh, actually a little above. Okay. Where was I? Let's bring Mag. Where are you? Let's bring Mag over here. So Silvercrest edged that out. Now, what's the average per unit? Would that be the sustaining costs? See, development material processed. Sales and treatment charges for like, is their gross profit? I guess it's just for this mine, but like their gross profit for that whole mine is $8,000. Please tell me that's like in millions of dollars. uh, how much is this company worth? $2 billion. It's more than Silvercrest. What? Please tell me that's in. I'm gonna assume that's in like millions, because like, oh, whatever. Continue on. So, development material process. What is this? The average cost, average price, how much they made. I'm guessing that's how much they sold it for. So quantity, average price per unit, amount. Please tell me that's like in millions. Well, I mean, considering it appears they weren't mining there, that they just kind of were taking a cut, maybe that's why that is. That certainly is low. All right. They're probably just running the mill for fresh Neo. All right, so generating cash flow from production to offset some cash requirements of the initial project capital, de-risking the flotation process through a better understanding the metallurgical characteristics in response to the Juanicipio mineralization, increase certainty around the geological block model, try to start up at the processing plant, sure, and allowing a faster, more certain ramp up of the nameplate 4,000 tons per day plant design. Now, what was Silvercrest tons processed? Little under. Okay. Oh, sorry. Oopsies. I talking to one of my students. I zoned out. I shouldn't put that stuff online. Hopefully I don't get in trouble. We'll see. Let's see. Continuing on. So tired. Don't do this when you're tired. It's not fun. Construction for 4,000 ton per day plant. Okay, yeah. So a lot of this data on this page is focused on increasing and ramping up their mill. I have not seen anything on mining, and I think that supports my thesis there. That's Fresh Neo is mining, the mag is more milling. Now, like that's I hope those numbers of how much profit they had were in millions or billions or something, because uh thousands is not good. Oh well, they have their mining rate right there. Oh well, it says yeah, it says 4,000 tons per day. So are they mining or are they not mining? Well, it says mining the vein right there, so I guess I'm wrong. Yeah, it's such a weird situation. I have like 50-50 on such a big mine. So I'm not seeing anything. There's quite a few matches for cost. Um, all right. Sue, I will probably call it there for the day. Get some sun. That would be ideal. Um, to reiterate, I think I have shown kind of difficulty this whole process that a lot of the clear cut numbers we could directly compare across companies aren't always publicly accessible in an easy way. Now, I probably still can be able to calculate them, and we'll figure that out absolutely because that is part of the picture of these companies I'm trying to paint. Um, but you know, there's ways that these companies can essentially throw out a number, make themselves look good. Now, I'm not saying that MAG isn't a good investment or PAAS or what have you. I want to take a little bit of caution in investing in them personally. A lot of people I know on the subreddit that discuss silver miners, I don't necessarily see information regarding like what we've talked about, right? That all in sustaining cost. How much are they mining per day, month, year in a time frame that they're able to mill and get to the market? Uh, I've seen life of mines typically for most of these mines, and they don't seem absurdly long, which would be a yellow flag. Um, yeah, I think this video has been pretty good in a lot of ways, just kind of talking about what numbers I like to see, what I'm not necessarily seeing, which doesn't necessarily mean it's a bad thing, but it's a little iffy. Hopefully you learned some from this video in finance, economics, these companies. Overall, maybe it will help you make an investment decision yourself or apply some knowledge to another company in another sector. Um, I want to end on a happy note. I'm not really sure how to do that. So like good luck, I guess. No, I don't like that. Well, hey, I'm fully invested in Silvercrest Metals. I have to say I'm not a financial investor. The SEC will come and get me. Um, YOLO. We're gonna have to settle on that as the happy ending. YOLO. All right.